some green shoots, if you will. The inventories coming off, the exports coming off. Let's wait and watch if indeed this tide turns for the better for some of the steel makers. The third piece on First Word today is about target price as well. 2018 started on a good note for the markets, but the high spirits did not last for long. Frauds, liquidity concerns, politics and policies on the domestic front, and on the international front, crude, rate hikes and geopolitics. All of these induced volatility in the market. The year did not pan out quite as the analysts had expected in the beginning of the year, and many of them have gotten their forecasts wrong. Yash Upadhyaya is standing by to tell us what they got right and what they didn't. Yash, good morning.
Morning, Neeraj. So I'll start with a bit of a recap to 2017, which was a phenomenal year for the markets, with both the benchmark Nifty and the Sensex gaining well in excess of 25%, and that in a way, spoiled the investor community in terms of their expectation. And as you mentioned, 2018 has been an eventful year. So we thought, why not go back and take a look at what the analysts were saying at the start of the year and how things stand as of now. So I'll start with the Nifty, and then I'll talk about the broader markets. 18 out of the Nifty 50 stocks, only they trade above the target price forecasted by analysts at the start of the year, whereas the remaining 32, they are below the analyst expectations from the start of the year. So which are the stocks that have done very well? And there's one theme that stands out, and that is the IT names. So TCS, Tech Mahindra and Wipro, all three of them top this list. So what this table says over here is the current target price of the current market price of these stocks and their target price as of the start of the year, and the percentage gap from their target price to their current market price. So 57% is the gap of TCS's current market price to its target price. So that is the level of outperformance that we've seen from TCS, as well as Tech Mahindra, Wipro, all of them having a gap of more than 28 to 39% in 2018, and Bajaj Finance and HUL being the other two names. What hasn't done well, or which are the top 5 laggards in this year? Then, well, Tata Motors tops the list, and the gap is huge, 65%. So the stock is trading at 174 rupees, whereas the target price at the start of the year was close to some 500 rupees. So a big letdown there. Followed by Yes Bank, HPCL, Bharti Airtel, and Vedanta, all of whom have a gap of anywhere between 40 to 50% over the last 1 year. As far as the broader market is concerned, there is significant pain, as only a third of those stocks are trading above their target price. So only 65 out of the 247 stocks. So we've arrived at the 247 stocks, Neeraj, after adding a filter of stocks which are widely tracked. So 10 or more analysts are covering them. So that brings us to the universe of 247 stocks, and only 65 of them are trading at higher than their target price over the start of the year. And which were the top performers? Let's take a look at that there again, and IT again stands out in this list. So Mindtree, NIT Tech, L&T Infotech, all of them trading far higher than their target price at the start of the year. And look at the kind of gap that is there. The significant outperformance, 76% from Mindtree, 76% NIT Tech. So it's quoting at around 1100 rupees. The target price at the start of the year was about 640. So well done there. Good job there. L&T Infotech, 58.5% outperformance. The other two names being Bata India, which is at record highs, as well as Adani Power. What hasn't done well? Let's take a look at that as well. And Navkar Corp, Skipper, DHFL, we had the NBFC liquidity crisis that hitting the company really very hard. It's quoting at about 227 rupees, and the target price at the start of the year was about 663. Somani Ceramics, the housing material space, that has been a big underperformer, and Somani Ceramics is one. 65.5% is the underperformance, as well as Tata Motors, as I mentioned earlier.